How do construction loans actually work? Well, so how they generally work, let me get rid of this for a second. How they generally work is you will settle on the land, right? So house and land package or land first then build, doesn't really matter. You settle on the land first and you start making payments on the land whilst you have paid a deposit for the build as well. And you're making payments on that land. Then what happens is the slab goes down. That's the first stage. And what happens here is slab goes down and the builder wants to be paid 10 to 15% for that slab, and the bank will fund that. So big picture, what's going on here is that the banks don't want to just hand over the entire amount for the land and the entire amount for the build, because there's nothing built yet, right? If they did that, they handed over 500 grand for a 250 build and a 250 land purchase and just said, hey, here's 500 grand, and the builder went bankrupt, the bank would lose their money. So what they do to protect themselves against that is they will fund the build in what we call progress draws. They will fund the build as work is done. Only once the work is done will they fund it. So at land stage, they've funded the land. If the builder goes bankrupt here, no stress. Well, not no stress, but just find a new builder. The bank won't lose out, and nor will you as the client. When the slab goes down and the bank pays for the slab, again, if the builder was to go bankrupt here, broadly speaking, the bank's not going to lose out. That's where insurance comes in, but broadly, the bank's not going to lose out. We go and find a new builder, and the bank's still got the money left over to fund the rest of the build, and so on and so forth. So the frame goes up, bank pays the builder a bit more money, lock up, roof's on, doors are on, etc. Pay some more money, fit out, so the kitchen's going in, the bathroom's going in, the things on the wall, fibro, whatever it is, going on the wall, all that's going in here. Again, once that's done, we pay the builder some more money, and your loan is slowly getting bigger. And then finally, the final handover is stage 5, and it's complete, and you actually got the keys and moving in. So that's sort of how the construction works compared to a normal loan, where it's just all paid because the house is already there. In this example here, for a construction loan, the main difference is that the bank is funding the builder at separate stages as work is done to protect them and also to protect you. And as they do that, your repayments will rise as well. So to that point, here's an example of the repayments. And here's an example of when it's just the land. You just pay $1,083 on this example. Your repayments are down here. But once sort of the slab is funded and the frame is up, suddenly your repayments have jumped up to $1,625 a month. And then as it goes to lockup and so on, your repayments progressively go up until such time as you actually get the keys and move in, and it stabilizes at your actual repayment. So just the idea here is just keep that in mind. Your payments will start out relatively small because it's just for the land only generally. But they do get bigger and bigger and bigger as the build goes through. And of course, during this, you might be paying rent or another mortgage, so you can have a bit of a cash flow squeeze there. So part of our Progress Protect plan is to help you sort of manage that and build in buffers or help you sort of navigate that as best as you can.